Ladies and gentlemen, welcome back to the channel. Thank you so much for being here. As always, today we've got a really awesome show. We've got Dino and Brian from Santiment. We're going to be talking about a data-driven approach and their platform to get that data to figure out what's going on in the market across a wide variety of assets. So Brian and Dino, thanks so much for being here.
Pleasure.
Thanks so much for having us.
Yeah, awesome. Really quickly right up front, just so folks can get familiar with who you are, love to do some quick intros. So Brian, do you want to kick it off and then we'll pass it to Dino?
You bet. Yeah, so I'm the director of marketing here at Santiment. We study on-chain and social metrics, have data for up to, and I think over 2,000 different assets now. And we at Santiment really do our mission is to ensure that we are giving the most comprehensive analysis with any biases completely eliminated on how the markets currently look. In their current conditions, whether they're bullish or bearish divergences happening, and what people should be looking for.
Awesome. And Dino, you want to follow that up? We'd love to hear about your background as well.
Sure. I've been with Santiment for 2 years now. I'm one of the market analysts, and I do, help with content and business development as well. Essentially, Santiment was launched back in 2016. Really, the idea behind Santiment was that at that time, I think and still for a lot of people that this rings true today as well, is that TA was the primary sort of way that people analyze the market and market behavior. In 2016, our founder just thought, well, there's a whole lot of alternative data sets in crypto that are unavailable in TradFi, traditional finance, that are just not being utilized properly. So we've sort of built our entire platform around three of these sources. One is on-chain data, which we collect directly from the blockchain, so there are no intermediaries. The second one, something that we're quite unique by, at least still, is social data. So what we do is we currently have we track around 1,500 different cryptocurrency related social media channels. So these are crypto Telegram groups, crypto subreddits, Twitter accounts that are of value, other sources of information, some of them hidden from Google, professional trader chats. And so we listen into those conversations, and we collect, I think, hundreds and thousands of messages on a daily basis. And we've developed a few metrics on top of that data set, which, we've backtested so far, and it seems like it definitely has some alpha in specific conditions. And then the last sort of source of information that we've built our platform around is development activity data. So I don't think dev activity is necessarily very interesting for people that are maybe, day trading, but I think it's very interesting as like a due diligence value investing indicator. Like if you're looking into a project that you want to be into for years on end, I think development activity is a very good gauge of how committed a project is to actually staying true to their roadmap, pushing new features, whether they're still investing into their protocol or they're sort of starting to fizzle out. So those are the three main sources of info. I think we'll mostly be focusing here on some of the more basic on-chain metrics and some of our social metrics as well. But for anyone interested in more, just check out app.santiment.net and start from there.
Awesome. Yeah, and I think you led into it perfectly. I think for most people, seeing is believing, right? And understanding what tools are at your disposal, using Santiment to make sense of what's going on in the market, to maybe figure out where the market might be going. Of course, there's no perfect indicator, but there's lots of data here to work with. So, Brian, I think you're going to show how the tool works and some of the options here across some assets.
Yeah, you bet. So we're looking right now at our main platform, app.santiment.net. This is essentially our home base for all on-chain and social metrics that are, key to understanding what's happening at any given moment in the markets. What we have highlighted here, and I'll full screen it so we can get a better look, is our token circulation for Bitcoin. And generally what this measures is the amount of tokens that are circulating within the BTC network, without including things like wash trading and counting the same coins multiple times in a given day. This only counts each unique token once. So whether it's whale activity or small micro trader activity, it's picking up on everything to see just in totality how much utility there is at any given moment. And to give a glimpse of how we're looking right now, since that's going to be a question on many of your minds, we're seeing significant a very significant rise, seeing levels of token circulation that we really haven't seen since right after the all-time high levels. Right here, we were at 243.35K in terms of unique tokens circulating on BTC. This was right after that first correction after the all-time high. Mm-hmm. For comparison, we're 10,000 above that right now at 253.3. So we have just in the past month or so really shot up to a level that we have not seen in quite a while. And this is generally a very good sign and a kind of a justifier, if you will, that the price rise that we've seen as of late makes sense and is being backed by what's happening behind the curtains on chain.
Mm-hmm.
Yeah, so I think some people may know Nvt ratio or may be familiar with the Nvt ratio. Essentially, that's a metric that utilizes token circulation. So the idea behind the Nvt ratio is you take the market cap of a coin, right, market value of Bitcoin, and then you divide that by the amount of unique Bitcoins, units of Bitcoin that are moving on the blockchain on a daily basis. So the idea behind the metric is, all right, if the market value of Bitcoin is too high relative to the the amount of value that is being transferred on the network on a daily basis, then that means that from this fundamental indicator, we might be a bit overvalued. And so on the other hand, if the market capitalization is too low relative to the amount of value being transferred on the blockchain daily, which sort of is a proxy for network effect and in general sort of the amount of value creation and value accrual, then we might be undervalued. And so Brian is showing one of our models that we've developed with our data, which is essentially an NVT overview of Bitcoin. For the first time really since May, we are seeing sort of a green bar in terms of NVT. So what that means is that because there's been a fairly significant uptick in the amount of unique Bitcoins being moved or just transacted on the daily basis, there seems to be fresh blood moving, interacting with BTC on a network level. This indicator, although just one of many, is starting to flash some, hopeful signs. And it's not the only one. I think one other metric that we've, talked about on our Twitter recently is just daily active addresses. So it is a fairly basic metric. It simply tracks the amount of unique addresses that are interacting with, let's say, Bitcoin on a daily basis. Just today, Bitcoin has gotten to 1.16 million daily active addresses. Now, that might not mean much to people that have not sort of been following this on a daily basis, but it took us 3.5 months to get back to this level. Between January 1st and the beginning of the May correction, there were only 5 days that Bitcoin's daily active addresses were below 1 million. So 1 million sort of used to be a pretty significant psychological milestone. And then once we corrected, once the May correction began, the general amount of interest and activity on the Bitcoin network just completely, flattened out. We saw the, on a daily basis, both the amount of Bitcoins being moved and the amount of addresses that are interested in interacting with BTC completely flattening out, and people moving into dormancy. So it's very, I think, generally speaking, of course, there's no silver bullet, but historically, I guess speaking, sustained price rallies usually go hand in hand with sustained and strong uptick in network activity, right? So daily active addresses, token circulation, these are all on-chain proxies for token-related demand. So if you're seeing sort of a sustained, slow but steady uptick in these metrics, what that really only points to is the fact that more people are utilizing this coin and more people are interacting, and there's more value distribution on the network on a daily basis. These are all, I think, all hopeful signals for us moving forward.
Makes sense.
Agreed. Yep. So besides address activity and circulation, we like to look at things like social metrics, notably something known as social volume and social dominance, which I'll add to this chart so we can overlay them together. And what we can see here is significant fluctuations in the amount of interest in Bitcoin over time. We certainly have plenty of spikes that we can identify here, and the colors are kind of blending together. So I'll see if I can make this a bit more visible through bar charts just for the time being. I'll even take off social volume. Just before I do, this social volume is just the raw amount of mentions of Bitcoin or the hashtag BTC on these aforementioned platforms that Dino mentioned, Twitter, Reddit, etc. So what dominance does is it will adjust for the percentage of total mentions of anything related to crypto on these platforms and see how much of that is related to Bitcoin or BTC. So regardless of whether it's 1 a.m. in the morning, 5 p.m., doesn't matter. It's going to adjust based on time and the amount of interest of crypto as a whole. And so when we see these spikes, like right here, this indicates that on June 7th, around I'm on Pacific time, so that's basically right after the daily market open, we were at 43% social dominance, just a massive number related to Bitcoin discussion in comparison to historical mentions. We can see here another big spike. And often with these spikes, we're going to see price corrections or turnarounds, especially if they're sustained for a long period of time. So for example, when this bunch of spikes happened, which are really like the largest collection of spikes when you aggregate them together of anything we've seen this year, that was kind of the market bottom for quite a while because we immediately jumped back up, and then interest kind of went away as people calmed down about Bitcoin, potentially going to zero, and the panickers became silent again.
Yeah.
So go for it.
Yeah, just wanted to add, this is one of our unique indicators that we've been developing over the last 3 years. Essentially, we've done some backtests on this phenomenon of how does social interaction and social chatter about a coin correspond to its price action. So what we've done, very simply put, we have this list of we call it social trends. It's essentially a tool on our platform where every hour we show the top 10 words that are gaining the most social volume or the most amount of mentions on crypto related channels relative to their previous 2-week average. So the idea is to capture sort of emerging trends on crypto social media. So one thing that we noticed very recently when we developed this tool is that, anytime that you see a coin's name, like, right now I'm seeing Shiba in the top 3 positions on that list. Anytime you see a coin's name end up on that list, usually the reason why people are talking about it so much, except if it's Bitcoin and Ethereum, because people talk about Bitcoin and Ethereum even when it's dumping. But when you see low and mid cap coins at the top of that list, usually it means that people are very euphoric and that it's mostly price related, and it indicates a risk of an upcoming correction because the market is becoming a little too greedy and a little bit too euphoric for its own good. So we've done some backtests where we've looked at the average price performance of coins in the 20 days before and after they show up on this list of ours, right? So what happens with the price of the coins in the 20 days before? And this is essentially what Brian is showing. This red arrow is pointing to the event, which is the moment that a coin's name appears on this list. As you can see, like 5 days before, all of a sudden we see a massive. So this is just the average price performance. This is on a sample size of about 650 different events, right? So 5 days before, the average price performance of these coins starts mushrooming. And obviously this is completely understandable. The reason why people are all of a sudden talking about it is because it's pumping, right? The more maybe interesting development is what happens in the 20 days afterwards, which is based on the sample size, which I don't think is very small, 650 different events. The average price of these coins drops by 13% over the next 20 days. So there seems to be some type of correlation between the activity of, or sort of the mind share that a coin enjoys on crypto social media, especially while it's pumping, and its price action. Once you see signs of market euphoria, excessive greed, extremely bullish sentiment, it might be time to reconsider your position in that coin for a short-term period. So yeah, just to kind of give an idea of what that means.
And that's really interesting, right? Sorry, Brian, because when I think oftentimes people might trade that indicator differently than that, right? You see a lot of people get caught losing money in crypto because they chase pumps. And that's something you hear a lot in the trader community. I'm not really a trader, but one thing from a fundamentals perspective that I do know is at a certain point, a coin gets way up there. You've had, maybe several 100% gains, and it's everywhere and everyone wants to get in on it. And at that point, you start to think about, not guarantee, but think about, this could be starting to correct soon because everybody that got in early might be wanting to take profits. People are going to realize they're not going to get rich tomorrow. They want out. So really interesting to see that in the data form be validated like that.
I mean, if you want a current example, Brian, if you want to just show what's happening with Shiba Inu right now and just look at the social dominance of Shiba Inu, we've actually in the last 24 hours, we've hit the exact same level of Shiba social dominance as it was at the beginning, at the price all-time high back in May. So essentially what that means, yeah, there we go. So and that was sort of the beginning of the correction, I think, for Shiba. What that basically, I think what this really suggests is that high elevated social activity while a coin is pumping, number one, obviously it points to excessive market greed, so that in itself is kind of bad, but it also points from a more sort of behavioral and trading perspective. It points to the fact that a lot of people, or most people, are already in the trade. Everybody's hyper aware of this pump happening, so there's going to be a reduction in potential buy side pressure moving forward as well, right? So these are the things that I think you can kind of capture with our platform that you can't on others. I've seen a few platforms actually treat these signals as positive, like, oh, a coin is gaining ground on crypto social media, but sentiment is super bullish. This might be the next big thing. Based at least on our backtest and analysis, is the exact opposite. So what you don't want to see is, you don't want to see the coin that you're into that might be pumping. You don't want to see the mainstream crypto community start talking about it, because from a social perspective, that's the death cross.
Yeah, look,
Right.
if you're skeptical of the accuracy of something like this, just take a quick glimpse at the four largest spikes here. We have here, 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 and here. What do they have in common? The price instantly retraced after every single one of these. Here, we had this price retrace here, we had this price retrace here, and we're currently seeing a retrace here with a little bit of a bounce, we understand, but where the price goes from here is really going to depend on how interested the crowd remains, as we see a lot of volatility going on, as it's now becoming polarized when the crowd is trying to figure out whether the top has already happened or whether it is still, in the near future.
Right. And looking at social dominance and maybe just kind of looking at it from the other side, right? Where you have a coin that's interesting in its own community, and you start to see it picking up. Is that an indicator potentially that you're catching a ride up, or is it too late? Once you see it showing up and start to catch dominance, it's too late to get into the mix?
Yeah, from what I've seen, and that's definitely a harder thing to answer. It is not going to be as consistent if you see a slow ride up like this or something. Generally, there's usually a fundamental reason. So if the interest is growing, but it's not related to a price pump, that usually means there's something happening news related, or like a exchange listing rumor, or something that is propelling people to flock to that coin and start discussing it. So I would call that more good than bad, right? Sort of like almost TA studying. If you see a gradual rise in price versus just this huge sharp spike all of a sudden, that's generally a more confident validation that the price has some legs in continuing to grow.
And I think the reason I asked that question is to get people thinking about how they can contextualize the data that you see here, something that's very quantitative in nature, and juxtapose that against the qualitative, what's going on in the community, to rationalize why these things are happening before you make a decision, right? So it's a holistic decision-making process. Sorry, Dino, go ahead.
No, I mean, right on point. I'm not trying to say that any spike in social sentiment or social volume or whatever is bad for the project. Absolutely not.
Yeah.
However, I mean, I think nobody can really tell me that this spike in social dominance is organic for Shiba Inu, that it's all of a sudden, people are talking about fundamentals of Shiba and very discussing the potential future. No, I think most of this is just people pumping the coin or sort of spamming rocket emojis or whatnot. And one other thing, I mean, I never look at these metrics in a vacuum. So, for example, what I would do is if I see this, if I see this type of spike in social dominance, I would also try to look into on-chain signals that we might be approaching a top, right? So, for example, for Shiba, what I've been keeping an eye on is the amount of deposits. So, Brian, maybe you want to show it. Active deposits is a metric that we have for all ERC20 coins. It's a pretty simple metric. What it shows is the amount of addresses that are being used to transfer Shiba Inu to known exchange wallets on a daily basis. So the idea behind this metric It's pretty simple. If you see a spike or a rise in active deposits, what that might indicate is that more people are looking to sell, and there might be an increase in sell side pressure in the short term. Obviously, this isn't to say that every spike in social deposits, in active deposits, is going to be this sort of massive dump, is going to lead to a massive dump, but it might lead to a short term correction because who is going to, if there's an increase in sell side pressure and a massive sell wall, the question is who buys all that Shiba at this price level, or at least when it's close to an all time high. So the crowd is hyping up Shiba, but on the other hand, we see a cohort or a group of its holders start to cash in on the rally. So, another sort of indicator that we might be approaching a short-term correction.
Yeah, another great metric. This is actually a perfect one for Shiba because you can see even on the small spikes here, big price correction. Here, big price correction. Here, big price correction. Obviously, this one, biggest one, big price correction. So deposits is somewhat similar to social dominance, just more on an objective on-chain perspective, so to speak. Yeah, another one we can look at here is whale activity. I'll go back to Bitcoin because we have extensively been studying over the past couple of months how whales of obviously the biggest crypto asset out there are impacting the price and therefore the overall crypto market landscape as a whole. So I'm going to open up a template I've saved. Everything I'm showing right now is saved as a template, by the way. So you can load your favorite charts and metrics, put them all in one place, and then simply say, I'd like to open up, the custom metric folder that gives me all the info in one spot. For now, I'm opening one called BTC Millionaires Absolute Values. And what this is showing me is the percentage held from a supply perspective for the 100 to 1,000 tier and the 1,000 to 10,000 tier. And then this pink line here is the totality of both of those tiers combined. So I'm going to simplify it, take these off, and we're now just looking at 100 to 10,000 Bitcoin addresses and what their cumulative holdings are over the last year in this case. And obviously, when you see a big price rise like you have, Bitcoin, if I highlight by holding shift, it's up approximately 382% over the past year. And with that, you can see the supply there in the top left of the box showing that there's been an increase of about 4.8% held of the total supply by this 100 to 10,000 tier. That is massive when you think about the actual USD value of that amount of Bitcoin. So what we look for is obviously that their accumulation pattern is continuing over time because they're essentially slurping up all of the capitulation that is going on from tiers below them and adding to their wallets over time, buying on these big dips when everyone else is panicking. And it as long as this is climbing, it's generally a good sign, not just for Bitcoin, but any asset that you're looking at. But if they take profit, like they started doing here on April 6th, what do you know? The all-time high hit about a week later, and then boom, we have this huge drop-off that the whales were kind of already preparing themselves for with this decrease of approximately from top to bottom. It looks like they dropped 1.8% of all of Bitcoin's supply during that stretch.
I think there was about 120,000 Bitcoin or something that was sort of offloaded from these wallets in about a 30-day span. I think this chart sort of gives support to this idea that Bitcoin's rally back in October started with institutional interest and rising institutional demand, right? Because really, if you go through each of these categories of holders, the one that really seems to have mostly been trending upwards from October all the way up until May have been these large addresses, which might be or most likely are attributed to whales and institutional holders. Like Brian said, around several local tubs, there's been a period of like short-term offloading or sort of the reduction in the holdings of these addresses, most notably the one that started around the all-time high. But yeah, right now we are seeing once again a sort of a upward trend. The last couple of days, it's starting to move slowly upward once again, suggesting that there might be, this might be another sign of relative confidence of large Bitcoin holders in the sustainability of this rally. I think actually I'm
Mhm.
quite surprised that they haven't really made larger moves given the fact that we broke 55K. They might be waiting for another sort of confirmation of the trend. But at least for the time being, the trend, relative trend of these addresses seems to be accumulation, which hopeful sign for the short term for sure.
Mhm. And it
Absolutely.
may surprise many that these holders have 0.16% more supply now than they did at the peak right before the all-time high. That probably is perplexing to many, that the whales behind the radar are just continuing to accumulate. And it should, obviously not investment advice, but at least theoretically, it should convince us, as far as consumers of this kind of data, that uh, Bitcoin probably isn't going to fall off a complete cliff unless this tier has a little something to do with it ahead of time.
Hmm.
Yeah.
Yeah,
So
absolutely.
sorry, go ahead.
No, and I was just going to say, continuing off of that thought, is that these wallets or these individuals, organizations, these holders, they have arguably the most exposure to this asset. And so for them to be doubling down or at least not reducing their exposure gives you some indication that there's confidence in the path
Pretty
forward.
much, yeah. I mean, to be fair, when you look at this metric, it's a pretty generic metric. Like these are all addresses from 100 to 10,000 Bitcoin. So these could also be addresses that belong to exchanges rather than just institutional interest. So one other thing that you also should do on our platform is account for those, and we have several sort of metrics that account specifically to the activity of Bitcoin as far as their interaction with exchange wallets. So, like for example, something like the total supply of Bitcoin on exchanges, I think is a good metric to look at, just to kind of give an idea whether there's currently a sort of network-wide desire to sell, or if it's the opposite. And as you can see, Bitcoin supply on exchanges has been dropping fairly significantly, or there's been a solid or sustainable drop in its total supply, while the large addresses have been accumulating overall. And I think this is not just because of its price action. I think there's more utility for Bitcoin now than there was a year ago. I think there's a continuing uptick in the amount of tokenized Bitcoin on Ethereum. I think Bitcoin is moving into the DeFi space more, and Bitcoin holders are moving into the DeFi space a bit more aggressively. So I'm not surprised at all to see the supply of Bitcoin on exchanges dwindle, and I would expect it to continue to dwindle just because there's more purpose for your Bitcoin today than there was a year ago. So this might introduce a supply shock at some point in time. What we have seen for especially like low and mid cap coins is that there seems to be a divergence between a coin supply on exchanges and its price very often, because the assumption is, assuming there's unchanged demand, if the amount of a coin on exchanges, if there's a reduction in the amount of coins on exchanges, it might help inflate the price of those each individual coin by proxy, right? So supply on exchanges continues to decline while large addresses are holding or increasing their holdings. I think also another sort of one of the reasons why we might be in this predicament, moving back up to 55K and hopefully retesting 60K soon.
Amazing. Yeah, I mean, and that's the thing, is that I think it's easy to go on on Twitter or to go on Reddit and to try and find analysts or technical analysts that are going to confirm the bias that you might already have, what you hope is going to happen. But I think even though it's never perfect, being able to take data like this to say, this is why I feel the way that I feel about the market trajectory. And if nothing else, this can help you at least balance your risk. Say, I'm not sure where this is going to go, so maybe I want to dial back my exposure in this asset or something else. How do you see users usually using this platform? Are they often traders, fundamental folks? Like, where do you see that playing out?
It actually depends. I think we have a few different categories of users. When it comes to using Sandbase, which is what we're looking at right now, app.santiment.net, it's mostly traders and sometimes journalists, fundamental analysts as well. Mostly, I think swing traders are a big category of our users. So sort of short-term traders and people that might look into sort of very long-term value investing. But I think a lot of our indicators are interesting for spotting tops in particular and short-term sort of directional changes. So this is what a lot of people are using our platform for. When it comes to our API, though, yeah, we've got some larger clients. We've got a few exchanges using our data. We've got people like digital asset management platforms and some hedge funds, which are essentially looking into creating new models and backtesting a bunch of our metrics to figure out what works and what holds some alpha. Recently, last couple of months, we've seen a lot of interest in our social metrics from larger sort of management platforms in particular. I think this is the type of data that seems to be missing a little bit in sort of an organized way still in crypto. Like, how can we track the behavior of the retail investor? How can we track the average sentiment or the consensus that currently brews in the market? And we're trying, obviously, I don't think our data is perfect. We're continuously trying to, flesh out the bugs, remove the noise as much as possible. But I do think that we offer one of the more clean solutions when it comes to figuring out what the retail sector is doing. And unfortunately, retail is very often wrong. Unfortunately for them, but potentially good for you. You might want to counter trade the average crypto enjoyer.
Right, without a doubt. And that's the big thing that I think data gives you, is to go beyond that surface level, the traditional retail trader metrics, which are what's hot right now, which is probably at the tail end of its momentum. And that's when you get left holding something that's down 60% in 2 days, right? That's the thing I want to help people avoid to the best of my abilities. So
yeah, to add on to that point, we really are a community created platform.
Right.
We have made many of these metrics based on user requests. So if you're looking for something with your data that is actually going to listen and take into account what you need, we've got a great Discord server that's just going to listen and try to implement whatever data you guys will find helpful.
That's awesome. And so speaking of that, I know we've just crossed the 30-minute mark. I wanted to see if you could share with folks how they can get started with the tool, and then beyond that too, there's a lot of tools here at their disposal, and where can they learn how to make the most of them? That would be my main question.
Yeah, so we have a discount code for everyone watching this video. If you enter the code Hashoshi on our app.santiment.net/pricing link, which will be in the bio of this video, you will get 25% off of your first month. It's already a quite affordable platform for what you're given. It's $44 per month price tag, which is, compared to our competitors, pretty much as good as it gets for what you're getting. And beyond that, we provide real-time access and feedback to whatever questions you guys have. We're available, myself, Dino, many other staff members. We're active all day, every day to answer any questions. To get resources yourself, if you want to do some reading, we have an Academy page on academy.santiment.net, which will actually give mathematical explanations and a few layman's terms regarding how these metrics work, why they're valuable, and how to use them effectively.
And so one
Awesome.
last thing is you should also check out our insights page. So there's a insights in the navigational bar. There's the insights category where somebody from the Santiment team on a daily basis writes something about the market using our metrics. So for example, I write these weekly reports every Monday where I basically try to use as many indicators as possible to specifically look at Bitcoin from an on-chain perspective, social perspective. We've got some derivatives data on Bitcoin. So it's even though it's sort of a breakdown of Bitcoin's current state, sort of a market experience, it's also a tutorial for really how to utilize these metrics on a daily basis. So I strongly suggest checking out our insights as well if you're just getting started. It can be a bit overwhelming. Yeah. I'm not going to lie. There's about 100 different metrics, but you don't really need all the metrics. I only use maybe, 7 to 8, sometimes 10 metrics myself. And, I share which of these metrics I find most useful. So don't be sort of a bit too taken aback with the breadth of the data. Just start with the easy stuff: daily active addresses, crowd interaction, social volume, whales, supply and exchanges. These are enough to get you sort of started into on-chain and social analysis, and then you can graduate from there as you go along.
That's great advice. And yeah, if folks are wanting to check this out, I'll leave all the links below. I'll leave some information about the discount code. So thanks to Santiment for doing that. And the other thing is that when you go onto the platform, make sure you come back here, leave any questions you have in the comments, or reach out to Santiment through their channels. And yeah, Dino, Brian, I really appreciate you coming to share this with me. I mean, I've gotten to use the tool a little bit, but I learned a ton just being on the call, watching you navigate through it and talk through your thought process. So
yeah, it's been a real pleasure.
Awesome. Well, thank you so much to everyone who's watching the show. Make sure that you leave any comments that you have or questions that you have down below. And please give Dino and Brian a big thank you on Twitter or anywhere else that you can find them on social media. Thanks so much, everybody. And until next time, cheers.
Thanks, guys.
Cool. Awesome. I'm going to stop recording.